Hello, everyone. Welcome back to the RationalInvestor.com's daily brief recap. About 7 minutes past the hour here. I do have to cut things pretty short, so unfortunately, I had to tell the good people today that it was a short presentation. And I went off talking about gold charts and trading view default settings. I wasted a lot of time in the daily brief. So my apologies, everybody. And frankly speaking, it's a holiday here in Canada, so there's not a hell of a lot going on. Down in the States, you can see the percentage move. So clearly, whether it's a bank holiday or whether it's just sort of everybody's just it's some middle of the summer. Most of the pros are in the Hamptons anyway. So yeah, it's kind of a quiet day in the market. So we did have Mondays. We have a report from TRI CTO. Unfortunately, the engine's kind of broken right now, and Seward had a little bit of a tough time with the audience just explaining what's going on. But long and short of it here, we're just keep working away. Never been closer. You know how the line goes. We'll just, slow and steady wins the race. So couldn't really comment on any signals generated from our screeners and stuff. And oh man, I'm missing my key reversal screeners now big time. It's like I'm a crack addict and I'm jonesing for my key reversals. What I think I'm going to do here is let's just do a quick sort of boo of what's going on over here. And I wouldn't mind having this sort of done by, let's say, 10:15, 10:20. Not a really long one because it's a holiday session. And I actually have to call in from Hero. He does a really cool video podcast regularly, Site OG. An alumni. He's actually in town, and we're Andrew and I, Korean barbecue. Andrew and I and Colin are going to have lunch together. So I got to get my act together and get out of here. So nice and quick, super summary. U.S. dollar index still coming off. That legislation down in the States about the stimmy is finally sort of pushing its way through. Interesting to see the humming and hawing between whether landlords are going to have the permission to evict people or not in the States. That's really interesting what's going on with that. What I would just simply say here is I don't think the United States is actually the focal point of sort of economic stress now going forward. I think it's going to be the third world nations of the world. This is sort of my whole argument of wanting to be U.S. dollar bullish. At the same time, too, though, if the Americans come out as sort of like we're going to save the world and they want to dilute the shit out of their currency, don't be surprised if this thing starts breaking. And now we'll actually see in earnest, right? If we actually start carving out lower highs and lower lows and we start losing these lows, then all you sort of gold mega bulls and commodity mega bulls, I think that story's still on. I myself, I'm under the crazy belief that we have turned the corner. But, place your money where your mouth is. Step right up, place your bets. One thing I did notice recently looking at this, which gives me a little bit of cause of concern for the bulls, is this is what's called a rising wedge. Where you can see we have all these rising highs, and then, we're sort of coming into a focal here. And then bang, 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 oof. So the inertia in the short term has definitely changed back to the downside. And like I said, if it's socialism 101 and huge stimmy packages, massive new debt programs, I wouldn't be surprised to see this thing come off some more. So let's see what happens. And of course, keep in mind, I'm actually a 17 and a half year bull of the US dollar. And that's going out like hugely, right? Sort of 17 and a half year bull cycle, 17 and a half year bear cycles. And that cycle pivot, you can see actually the bottom was put in 2008. So we're still very, very far away from that pivot low. So, if this does translate into more sort of commodity bull, in fact, Kevin was even telling me he was listening to a commentator just recently that they're buying lots and lots and lots of crude oil call options, even up here. I'm not buying into that. It's not my mantra. It's not my story. I don't think that's the case, but the market will do any old damn thing it wants. And half our job is just to sort of be flexible. Don't paint yourself into a corner. And if we do start aiming out here and start breaking, I'm going to have to say, well, US dollar bullishness has been put on pause. Probably the easiest way for you to validate that this thing has bottom is turned to higher. So we need to go and take this 93.43.7 out. We just went and fractaled here on the sort of the news that, yep, a whole bunch of new U.S. debt is coming. They're going to save the world again. And then what'll end up happening is we'll do a whole bunch of swap lines and stuff and start saving the European companies and Airbus and all that bullshit, which is exactly what happened here. And that's what caused the U.S. dollar index to collapse. And, of course, your lumber price goes through the roof, crude oil, all the commodities all go crazy. So we'll see how it plays out here. Only time will tell. Also hearing, too, about people talking about the stock market going parabolic into the end of the year. And maybe that's on that U.S. dollar meltdown. I don't know. No doubt about it, there's a ton of risk in this market. I mean, it's there. If we just do 50% rule retracements of the past year, well, that alone is going to be 140 points roughly? No, 400, 600 points, so about 15%. Just a move back to the natural, healthy 50% rule is now a 15% stock market correction. What was the last one they did? That was 36%. Oh, yeah. So I don't know whether it's going to be that bad. That would be predicated on this latest probably variant of the sickness forces the government people to shut everything down again. And you can see even just a 50% rule there. That's about 25% correction of this whole move. So, oh man, this market is getting risky again. At the same time, too, and this is what scares me, I did see an interesting study that some people are kind of thinking, especially if we think about like the end of the dot-com days, the way the market just went parabolic into that end event. That was sort of like through here. Do we have this kind of chop or we just keep chopping, and then eventually roll over? I mean, what does that top look like? Do we have to go through something along those lines here? I don't know. There isn't really a M in place here yet. And I've said this to you before. I actually believe that this dump here I think caught the market to all intents and purposes off guard. And the Fed governors themselves were super scrambling. Having said that, no doubt about it, market is getting very risky again. So, and we're into when we go into like August, September, October, right? This is when, the stock market crashes of generations gone by happen, that October period. Ugh. So if anything, what I'd almost prefer is we just quietly, just calm down, nice and orderly, but I doubt that's going to happen. And if that U.S. dollar does roll over in earnest, huge new government plan, funding and stuff, that is a huge risk on bet. And, a lot of people have said that they expect the stock market to go parabolic into the end of the year because the economic growth numbers are just absolutely through the roof. So no sell yet. Damn expensive, damn risky. Insane economic backdrop, no interest rate, no cost of borrowing money at all on the short end. Fiscal policy, it doesn't make any sense at all. With the Fed having interest rates at zero, basically they've got their foot on the gas pedal as hard as they possibly can. Still, now with the market looking like that, they still have to have this situation. So how the hell are you supposed to make head or tail out of what the hell's going on in the world right now? All I'm going to simply say is people that are going to come in and load up on risk assets here, you're asking for trouble. Yeah, we might move a bit higher, but at the same time, too, 50% rules are 50% rules are 50% rules. And everybody in Bitcoin just got a huge lesson about 50% rules, right? So we all know this is exactly the same thing as me criticizing those Germans and that Da Vinci guy. Technical analysis doesn't matter. RSI signals don't matter. M's and W's don't matter. That's exactly the same conversation that's going to be had now in the stock market, which scares the hell out of me. Because it's okay when crypto craps out and you get these big face rip downs because crypto's relatively contained. When the whole damn stock market goes into that kind of thing that we saw happen to crypto there in the late spring, early summer, then the shit really starts hitting the fan. One thing that did kind of take me a little bit by surprise today was actually they're bringing the oil market down here, and maybe this is sort of a function of okay, things are just gone a little too far too fast. Beautiful that they rallied the market into an actual M top, filled gaps in, and now a big dump. Now the problem here is today's sort of a semi-holiday day. So ironically enough, this 3-bar pattern doesn't actually translate into an actual trade signal unless we take out that low. And then, of course, are you going to short here? Ugh. Is this setting up for maybe like some sort of bullish bot setup? So we want that W on the other side of the trend line, and boom, you get a big fat buy signal over here. I don't know. We'll see how this develops. Now we're back below the trend line. I suppose new sell signals. We really want to see some sort of M come in there. And, as we said there a moment ago, the original market structure top, the rally into reload short zones, the gap fill, there's your trade level right there. And then I think we've told you this before. There's a fundamental problem with the economy if this oil price just keeps ratcheting higher. So maybe the transports will actually start feeling a little bit happier if this thing actually is breaking in earnest. So a little bit of a disconnect there in risk, right? So oil theoretically is your risk on. Stocks are risk on. I think crypto to a certain degree is risk on. One of the triumvirate here on the risk honors is coming off here today at an interesting level too. Fascinating to see. The bonds, of course, we're always worried about inflation. Rising oil price, of course, is very inflationary. So interesting reaction out of the bond market today. Pretty big rally. Is this a double top, right? If this crude oil market bottoms and we head back up, then that probably is a double top. And oh boy, look out. But for the time being, we're still okay. Maybe we're even getting W's on other sides of trend lines. So that's kind of encouraging. You can see we got a foggy boggy that was tagged up here. Probably next foggy boggy is 172 area up in here. And I like this story now because what I'm hearing is the whole world economy is slowly grinding to a halt. I like the idea that, ironically enough, gold actually, number one, it had its lunch eaten by Bitcoin. So all those gold bugs, they're still bitter that Bitcoin basically got all the buying power from the fear asset people. I also like the idea that the dilution of the currency itself justifies the higher price in the gold price, not necessarily that gold is a new bull. And if we have a situation where the world economy is unwinding, and the analogy Sjord gave us in his presentation today was that the amount of chips that go into all these fandangled products that people are buying, and how there just aren't any chips. And now the backlog order is getting ridiculous. People that really need chips, well, they're going through hyper price inflation now. And the manufacturers are just passing the price on to the consumer. But the problem is the consumer's not going to be able to just absorb that. At some point, people go, oh, fuck, I'm not paying for that. Forget it. I don't need that electric Porsche. I thought I needed it, but nah, not at that price point. But really, it's all the littler things in our society that people do kind of buy on a regular basis. Those chips they're just not there. So that means that those products are not being made, those products are not being shipped, those products are not being sold into the marketplace. That, in my opinion, is all very deflationary. This whole global economic mechanism should start reversing and unwinding. That, in my opinion, is not inflationary. That's deflationary. So probably what ends up happening is Japanification. Same thing I've said all along here. The U.S. is going to continue to dilute their currency, to continue to buy bonds, to honor those bad debts. And the whole global economy should just slowly grind to a halt. Should be fascinating to see, I'll tell you that much, by crackers. Also, too, I suppose with the sickness now, the whole pandemic kind of thing, and do you have your vaccine passport and all that? That's not going to create more economic activity. That's going to create less economic activity. And then to add insult to injury, I thought it was hilarious. Seward was telling us that the American vaccine manufacturers, now they're starting to raise their prices. That's awfully sweet of you. So they just raised their vaccine prices 25%. Just like that. Jerks. So again, you can see the writing on the walls for 2022, 2023. This economy, the global economy, could be in for big trouble. And I think we started to see that in the Chinese stock markets already actually starting to unwind. Risk on, risk off. Sort of another proxy, junior stocks. Keep in mind, it's kind of a quiet market today, so not too much to talk about there. But, I mean, that's an M. If we can W out here, okay, great, we're back in business. But that's an M right now that worked, fired off of the failure of that level. That's not good. I get the impression that when it comes to crypto, and it might even be a function of maybe crude oil prices are going to calm down a little bit, but I do get the impression that crypto tech, if you will, feel a little bit happier. And if anything, maybe now we finally get our sort of summer silly season in crypto and the altcoins and all that kind of stuff. It's probably going to be a bit muted this year, but things like Bitcoin, I don't mind the idea of it sort of working its way higher here over the next little bit. This kind of chart was what I've been talking about recently. We're coming up against this trend line. Doesn't surprise me that we were kind of rejected off of the first tag of it. My hunch here is that we're going to punch through it. And unfortunately, a lot of the public's going to think that this punch through is a big buy signal, but I actually think we're going to rally up into this high to low trend line, hit foggy buggies, maybe if we're lucky, even hit Mountain Man to the upside, and then roll over. And oh boy, like I said, this fall, September, October, man, I feel like there's a big stock market thumping coming here. So be forewarned. The good part about this, all you people patient and disciplined, I mean, I don't know where the hell the bottom on this is. We might have to come all the way down here. I don't know. I mean, you just don't know. Don't get into the business of predicting. Just react. Point here is I'll be more than happy to buy lots of Bitcoins down in this area. I'm not going to be buying Bitcoins up here. So just that simple. Altcoins, of course, we have been loading up on altcoins pretty religiously over the past month or two as price sort of comes down into levels. This Luna, of course, Seward's a huge fan of Luna. Kevin was even telling us today that he got off his double on Luna. Is that correct, Kevin? Yeah, I think you said you got a fill on your double order.
Yeah, that's right.
Rock on.
1109 or something.
Way to go, dude. My cost was a little bit
1190.
higher because I bought a little bit up top here, right? Doofus. So my cost is a little bit higher. Still think this thing's going to work its way up higher, but it was great to hear. A lot of people on the site super, super happy about names like this. There's probably going to be a few more of these kind of stories through the summer here. Um, be selective. And of course, once we get into sort of the end of the year, beginning of new year, I'm actually thinking a lot. I'm going to be lightening up a lot. I think I've told you that before, but I did things like my shitcoin 5,000s. Hey, look at that. You can see this little guy's starting to work his way up. I get any kind of rally on any of these things up through the summer here, back up into levels that we saw last winter. All of them will be spitting out doubles. So just patience, discipline. And like I said, it's kind of a pseudo holiday today, so not really a hell of a lot for a guy like me to do right here. Okay, I think that's sort of your summary for the day. Slow and steady wins the race. Be careful here, folks. Over the next couple months, it's going to be a bit challenging. Take advantage of the time to sort of get your plans in order. Try and figure out what type of risk taker you are. Set up your sort of buying program, what it is that gets you to actually act based on the type of risk taker you are. Just take the opportunity to get all that together. And ironically enough, you want to just wait for price to actually come down and clean itself up. You can see the divergences here in Bitcoin, even in the short term. I don't think there's a huge hurry here right now, folks. But you want to take that opportunity, get all your ducks lined up, figure out the names that you like, figure out reload zones, wait for the divergences, wait for the W's in price. It's probably even now. I mean, Luna, it's gone, but a lot of other names are just sitting like that ONT that I showed you. I really like that ONT. It's just sitting there. You can see the W that's trying to come in here. I mean, the irony of it all is nothing that we do here changes. Same old shit. So, just get your list together, get your reasons together, get your capital together, see if you can, have some patience and discipline, and trade your setups. And like I said, I think over actually the next month or two, this isn't a terrible market. So, okay. Have yourselves a great day, everybody. Hopefully, maybe I'll even show you some pictures on the Twitter feed from our lunch. Colin and Andrew and I are going to have PMA for the win. All the best. And only thing left for me to say here is bye for now.